So in the past couple of years, much of which has been in the last several months, we've seen the Bank of Germany, Austria, Slovakia, Argentina, the Netherlands, Saudi Arabia just a few weeks ago, Hungary, Belgium, Egypt just a few weeks ago, Senegal, Romania, Nigeria just a few weeks ago, Poland, Ghana just a few weeks ago, India earlier this year, France, Turkey, Serbia, Venezuela, Algeria just a few weeks ago, Cameroon just a few weeks ago, South Africa just a few weeks ago, and Czechoslovakia. That's just a basic Google search. All of those countries, almost 30 of them, all brought their gold back home. At the same time, they've been buying it at a level the world has never seen.
In 2023, the annual Invesco Global Sovereign Asset Management Study found that over 85% of the 85 sovereign wealth funds and 57 central banks surveyed expect inflation to be higher in the coming decade than in the past one. To safeguard against the ensuing economic uncertainty and turmoil, the respondents said they were buying gold and emerging market bonds, describing both, particularly gold, as solid investments that can weather the coming storm. The survey also revealed that an increasing number of countries were repatriating gold reserves to safeguard against potential sanctions like those imposed by the West on Russia. Additionally, the freezing of almost half of Russia's $640 billion in gold and forex reserves by the West in response to the Ukraine invasion has spurred a significant shift. Since then, central banks have continued to buy more gold, and more central banks are repatriating their gold. At least 2 African countries have repatriated their gold in recent weeks. Ghana announced its decision to repatriate its gold reserves from the United States in April, explaining the decision goes beyond the symbolic gesture of reclaiming control over its precious metals assets. It also underscores its desire to shield itself from the uncertainties of a destabilized U.S. economy. Nigeria made similar announcements last month. Officials said the decision is to mitigate risks associated with the weakening U.S. economy. Similar events are happening in other continents and regions across the globe. India recently repatriated 100 tons of gold from vaults in the UK, same with Saudi Arabia, Egypt, and a host of other countries. According to Andy Schectman, the president of Miles Franklin Precious Metals, all these repatriations signal an important shift in central banks' approach to precious metals investments. Andy believes this also portends a major geopolitical shift that could result in the permanent end of Western hegemony and the birth of a new world order backed by commodities. We will present clips from Andy's recent interview with The Contrarian, in which he discusses the changing geopolitical dynamics and the rapidly rising BRICS movement. Please watch, share, and like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. We appreciate the support and hope you enjoy the video.
Kind of feel, Logan, that the gold and silver markets are playing by a new set of rules. Kind of like the long-standing trend of price of gold and silver being determined by not only the Western institutional investors, but the Western banks, the commercial banks, the central banks, is breaking down. I think the flow of gold from west to east is a real transfer of wealth, and I find it really crazy, if not worse, how much the West is underestimating the significance of this. We are seeing a massive accumulation by the world's central banks, using the suppression of the Western paper markets to run cover, indeed, for their accumulation, which has reached levels that the world has never seen in over 100 years in all central bank history, who are not just the wealthiest traders on the planet, but also the most well-informed traders on the planet. And I believe in particular when we talk about gold, that gold is replacing the U.S. Treasury. If we go back 25 years to 2000, we see that gold has doubled the performance of the 10-year Treasury. If we go back 50 years, we see gold has just surpassed the performance of the 10-year Treasury for 50 years. It's doubled over 10 years, but just scraped by its performance over the last 50. It has outpaced since 2000 every investment with the exception of Bitcoin, which started from zero. But if we look at even the S&P 500 over the last 24 years with dividends reinvested, it's averaged about 9.5% to gold's 9.9% compounding. It was reclassified by the Bank of International Settlements as the world's only other tier one reserve asset, next to U.S. Treasuries and U.S. dollars. And when we see the world's biggest money, who is the most well-informed and influential group of traders on the planet, not only massively accumulating gold, but something even more interesting is the repatriation of gold. Over the past year and a half, 2 years, and many of which have done so over the last several months, we have seen a massive repatriation agenda where these countries are bringing their gold back home. Look at the Bank of India as an example. India, who is either the number one or two largest accumulator of gold on the planet, well, they bought more gold in the first 4 months of this year than they did in all of last year. And they brought it all home. They repatriated it, along with 100 metric tons that they've held at the Bank of England since 1991. The Bank of England and the New York Fed have been really the home for most of the world's gold over the last 50 years plus, because you had Western rule of law in a stable jurisdiction that gave direct access to the LBMA, a la Bank of England, and to the COMEX, a la the New York Federal Reserve. So they would keep their metal in these institutions with immediate access to the large trading hubs. Interestingly enough, over the past 100 days, the cumulative volume in the Shanghai Gold and Futures Exchange has increased by 200% and outpacing the COMEX. It is now the second most influential platform. I guess it has the most volume, second most volume on the planet, next to the LBMA, surpassing the COMEX. This flow from west to east is real, as is the repatriation.
During the interview, Andy also talks about Project Mbridge, the result of extensive collaboration between the BIS Innovation Hub, the Bank of Thailand, the Central Bank of the United Arab Emirates, the Digital Currency Institute of the People's Bank of China, and the Hong Kong Monetary Authority. The project aims to explore a multi-central bank digital currency platform to enable instant cross-border payments and settlement, and on which the railings for the new BRICS currency will be built. In June, the Bank of International Settlements announced that Project Mbridge has reached the minimum viable product stage and continues to broaden its international reach. According to the BIS, Project Mbridge is nearing completion. Upon completion, members will be able to transact with one another freely, bypassing the SWIFT payment system that has allowed the United States and other Western countries to place strict financial and economic sanctions on other countries. Andy warns that this will be the all-at-once moment for the dollar, US Treasuries, and the US economy as a whole. Let's get back to the interview.
I do think that's exactly how it will go. I mean, gold has been creeping higher. It's averaged 9.9% per year since 2000. It's outpaced everything. And then it will go way higher when the realization that this is the system that we are moving towards becomes acute. People in the West have no idea what's coming. They can't get out of the way of what they don't see coming because our media doesn't do a crappy job. They do no job of telling us what's really happening. I call it logarithmic decay. Little by little by little by little, then all at once. And that's what it is. And you can see the little by little are the central banks. They know the playbook. So quietly, let's use the Western suppression to de-dollarize and wickedly accumulate gold and bring it home without really distorting the price. And then when it becomes obvious to the rest of the world that this is what's happening, the big money, as usually happens, is already sitting comfortably in their position, and then they'll let it run. So yeah, I do think that's what will happen. And it's interesting, gold is held in all central bank balance sheets across the globe, Logan, in an account called the gold revaluation account. You can't make it up. Over my shoulder there, that's what Roosevelt did in 1933 when he confiscated gold, devalued the dollar by 40%, in essence, revaluing gold by 40%. The head of the Dutch National Bank has been very adamant about this. He says, we hold gold, even though our balance sheet is upside down right now, we don't I'm not concerned because we have 20 billion euro in the gold revaluation account. On central bank balance sheets, you're not allowed at this point to offset liabilities with your gold. So gold is in your asset side of the balance sheet, and they have to balance out the same amount in the gold revaluation account as on the liability side. So, and it's valued at $35 an ounce in all of those central banks. That's the Bretton Woods number. And if you think about it, how high could gold go, being that it will be backing a new system? Even look at the way the West talks about it, right? Kristalina Georgieva, the head of the IMF, said any CBDC not pegged to something is fiat. But before that, the IMF, her institution, issued a report. You can Google, it'll pop right up. Gold as an international reserve currency, a barbarous relic no more, ? It is the only other tier one asset. I think they all know that a CBDC has to be pegged to something, that a system that has lost so much trust through inflation, through weaponization, will need to be trustless. There will have to be something that inspires trust. That is the marriage of blockchain technology, a la the Project Mbridge and the unit and a commodity like gold. And that's exactly what will happen. I really do believe that. And they could revalue it just like that. Heck, in China right now, silver is $4 an ounce higher. Why? That's the real price of silver right now, because that's what someone will pay for it. So they're inspiring and incentivizing the traders in the West who have access to the COMEX, the LBMA, and the Shanghai Exchange to buy in the West and deliver in the East. What if they made it $9, $12, $50 higher, $100 higher? What is the real price? What if they say gold is $10,000 an ounce? This is what we'll pay for it. This is the market price. That is the market price, not the BS that the Western markets have created, this illusionary price through the ability to trade years worth of mining production in one day. Way more than they have bars backing the contracts. That's what the Hunt brothers noticed in 1980. They said there's way more contracts than there are bars, so let's buy all the contracts and stand for delivery. And they did, and they drove the price up. And then the exchange changed the rules on them and said, well, you can be long only a certain amount, but you can be short as much as you want.
Andy believes central banks are about to pull another Hunt brothers moment with gold. The only difference is that these are the most well-informed investors on Earth with quite a lot of resources. At the moment, they are relentlessly using those resources to buy a lot of gold and silver for the reserves while dumping US treasuries. Andy believes that all these repatriations will be followed by the revaluation of gold. And he agrees with Jim Rickards that gold prices could get as high as $27,000 per ounce. And it's not just gold. Andy is certain that central banks are equally interested in silver. They are not just as vocal about buying it as they are about buying gold. He gives the example of India, which has bought almost 700 million ounces of silver in the last 3 years, and China, which, according to reports, is striking deals throughout South America and buying up all the unrefined silver at massive premiums to what the West would pay. They are, of course, taking all of the unrefined silver immediately back to China, where they refine it quietly without affecting its price. Andy predicts that when these countries are good and ready, they will revalue both gold and silver and introduce a new global payment system pegged to both metals. Do you agree with Andy's insightful analysis? Please share your thoughts on Andy's interview with us in the comment section. If you like this video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the notifications bell for more videos like this. Thanks for watching.